FOE, or you might know it as fear of entering, is a very, very common trait in Forex traders. And today I'm going to talk about how you can possibly improve this, improve your entries, improve how you actually enter your trades without the fear of entering the trade. A lot of people think it is literally just because you're scared to get in the trade, but I don't think that's really the case. And today I'm going to talk about how you can improve it, how I think it's mainly towards your mindset and towards your trading plan, and how some basic adjustments in their trading can improve their trading overall. Firstly, you need to remove your emotions from your trading. So you've probably heard a lot of people say you need to start trading like a robot. You need to trade with no emotions at all. And obviously you can't just flip a switch and you have no emotions with your trading. Obviously, if there is real money on the line, you're going to have emotions. You know, everyone's going to have emotions when if they enter this trade, they could lose money. Or if they enter this trade and they're seeing £10,000 profit or they're seeing £10,000 loss, there's going to be some sort of emotion there because that's a lot of money to see. You know, it's normal to have emotions with your trading, but there are quite a few ways which I think you can remove this emotion and make it more systematic like a trading robot. And a good example of this is EA robots. So you've probably seen, if you're a subscriber on the channel, I did do 2 or 3 episodes on a trading robot trying to pass an FTMO challenge with it. It did actually fail. However, there are a lot of lessons which you can actually learn from actually using a trading robot. And in this video, the trading robot had a certain plan. So whoever set up the robot, they had inputs on when the bot would actually enter the trades. And as soon as those criteria were actually hit or met, the bot would then enter the trade. You know, it wouldn't matter if it didn't feel like the trade was going to go right, because obviously the bot doesn't have emotions. But that's where a lot of people actually go wrong. They think they have a perfect setup. You know, their trading plan is just perfect for this trade. But then they're like, oh, I have a feeling it's going to go down. All your analysis says it's going to go up, but you have a feeling in your mind that it's going to go down. You know, the markets don't care about your feelings. And if all your confidence is, all your plan is indicating towards price going up, why would you not enter? Worst thing that can happen is I lose the trade. Best case scenario, I make profit. And the good thing about the robot is it didn't care if it lost the trade. It didn't care if it won the trade. And that's kind of the state of mind you actually need to be in with your trading. You can't care when you lose. You can't care when you win. It has to be the exact same for both. The more consideration you actually give the trade, the more time you're there sat thinking about entering the trade, the higher the chance you won't take the trade. So you'll be there like, oh, am I going to enter? I'll wait for one more rejection. You get that one more rejection. Oh, I want to see another rejection. I want to see this happen. I want to see this happen. But that's not in your plan. So why are you waiting for that? You're just scared of entering the trade. You're scared of losing money. And that's, you know, it's fine. And it does come with experience. But if you have a systematic process in place, then this will pretty much be eliminated. And then after this, you'll be like, oh, I should have entered that trade. I could have made this much. I could have bought this with the profits. Yes, but you didn't. You've probably heard the saying, no risk, no reward. And it's completely true in trading. If you're not willing to risk your money, you'll never make money. Technically, you lost out on that profit because you didn't stick to the trading plan. You stuck to your emotions and not your trading plan. Secondly, you've got to ensure that your trading plan and your strategy has been fully tested. Personally, if you've probably seen my other videos when I go through my backtesting and how I actually go through the process of building a Forex strategy and building a Forex plan, you know that I do hundreds and hundreds of backtested trades. You know, I use the program called EdgeWonk, link in the description if you want to go sign up for it. I'm not sponsored or anything like that. It's just an affiliate link, which obviously helps me. I use EdgeWonk. They have a built-in backtesting journal sort of layout where you can put in the results from your backtested trades. You can write notes next to them and it has a little counter to see how many you've done and the results from that backtesting session. So what I do, pick one confluence, pick one time frame, boom, 50 to 100 trades. Once I've done that, maybe I'll use the same confluence, different time frame. Same again, and you'll start to see patterns happen. So let's say you're using supply and demand as an example. If that certain area gets held on the 1 hour better than the 15 minute, and you're getting better entries on the hour than the 15 minute, you're getting stopped out more on the 15, then you could probably think, okay, so my setup's more valid if this area is holding on the hour instead of the 15 minute. So then in your trading, actual trading, live trading, you can realize, okay, this is good because the hour is holding, the 15 minutes holding, so then you kind of have the both confluences there that it's actually going to hold. And once you have built up these hundreds of trades, you know, different time frames, different confluences, even different sessions when you're actually entering a trade, you know, you could test London session, New York, Tokyo, all this. just to get that better understanding of when your strategy works and how it works. And let's say you come up with a 70% win rate. So you've done 500 trades, let's say, as an example, and your overall win rate was 70%. If you think about it, with a 70% win rate, so that's 70 out of 100 trades you'll win. And that also means 30 out of those 100 trades you'll lose. And because of the probability, 70 to 30, you could lose 30 in a row. So you've just got to realize that even if I've just lost 4 trades in a row, and then I don't want to enter this trade because I don't want to make it another loss, people with 70% win rates, which is very, very high, had the possibility of losing 30 trades in a row. So if someone with such a high win rate can lose this many in a row, why am I scared of losing 4 in a row? Because it's inevitable. Any strategy is going to have losing streaks. Any strategy is going to have these spells where it's not as profitable. It's like with signal groups. If people were expecting that person to make 10% a week every single week of the year and aren't prepared to go through these stages of drawdown, let's say these 30 trades, then they pretty much have no clue about trading. And if this trader that's running the signals or showing those trades has a good risk reward, they have good money management, risk management, but you'll be overall up over the months anyway, over the years, you'll be up tons and tons of money. And once you know how well your strategy actually performs in the markets on that certain pair, then it kind of removes the emotions from it, because you know, if my 5 confluences of active on this trade, they're all met, I'm going to enter. If it's in the right session, I'm going to enter. So if everything lines up, no matter if I feel like the trade's going to go down, I'm going to enter, because my strategy, which I've tested, I've put hours and months into testing the strategy. What's the point of doing that if you just go with your gut feeling? You see what I mean? It seems quite easy to say, but once you're actually in that situation, it gets a bit harder. But let's say you have it up next to you. You have the trading plan here, you have the charts over here, and you kind of look over, okay, tick, 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 boom, enter. That's what you should be doing with your trading. The final point is you need to have rules. You know, I just mentioned that the trading plan, you have to have those confluences, you have to have the sessions to actually enter the trade, but you need rules in your trading. You know, a lot of people that suffer from over trading should have that rule where if I lose 3% in a day or 2% in a day, I'm not going to enter any more trades and then I'm done for the day. But obviously if you're watching this video, you don't suffer with over trading, but you need to set rules which help you with your fear of entering. The good thing to actually help this is to have set sessions. So let's say you're seeing a perfect trade in London session, all your confluence is perfect, but then it's London session, don't enter. It also helps you build discipline as well. But then let's say 5 hours later, you're in New York session, that same setup happens. Ideally you should enter, because you know that's in your rules, that's in your trading plan. The session matches up, the confluences match up, so enter the trade. And once you actually do this, I'd say for a few weeks, a few months, it'll just be like second nature. You'll look at the charts, you tick off the confluences, and then you'll get into the trade. And after a while, you'll realize once you've taken over 100 trades, what your true win rate is. You know, it's all good backtesting it, but also you need that live trading. You need to realize, okay, am I closing out a break even too early? Am I not holding to the original target? You know, you can notice all these things from actually trading and from journaling as well. I hope these little tips did help you guys with your fear of entering, and even if you don't have fear of entering, could still benefit you guys from watching this video. And if it did, like, subscribe to the channel, and I'll see you guys next time.